Leo Kelly joins me now. Leo, picking up on what Lauren said, is DWAC another meme stock? I mean, has the meme stock frenzy returned? It's up 3.5. It's at $44, but money pouring in. What do you say?
Well, I say what we're starting to see across this entire platform, and we just had the Reddit IPO go up. We're starting to see some characteristics very similar to '99 and 2000. Where valuations are sky high in a select group of the market. IPOs are getting hot again. Now, this one particularly with its background story is interesting, but nonetheless, I think it's a moment where it's time to start to look at these valuations and look at these IPOs and look at some of these similarities to prior markets that got very, very hot.
Let's talk more about Reddit then, Leo. I mean, it's been around 19 years, doesn't make any money. The moderators on its platform are not happy with the company, and yet here we are. What was the valuation when it went to market? $9 billion. What do you make of Reddit?
Well, I think we're in full fear of missing out. I think that's where we are at the moment. Investors are clamoring for the next hot idea. I'll say it. This is starting to look a little bubbly, right? When we look at some of the valuations of the AI stocks, we got a hot IPO market. You've got companies losing money and going for astronomical values in IPOs. We're starting to get to that phase where investors are starting to get a little heated and trying to grab return. As I always say, be careful in a market where investors are not buying the asset, they're buying the return on the asset. That creates some interesting risk in the market.
I've asked a number of analysts over the last couple of days, Leo, are we in a bubble? Some say we're heading in that direction, to your point. Others say no, there's so much cash on the sidelines. If it were a true bubble, there'd be a lot more money pouring in.
Well, I mean, in every bubble, before it bursts, there are experts, many Nobel Prize winning, that say, we're not in a bubble. This is great. You don't get the prices elevated to extreme levels without extreme optimism and enthusiasm. So there's no question, bubbles come in 3 stages, right? There's the enthusiasm building. The second wave is high valuations as there's extreme activity in the marketplace. And the third is when caution goes out to the wind, assets flow into a particular segment recklessly, and valuation goes up unexplainably. So I don't know if we're at the end of 2 or we're in 3, but I will say investors should be careful. They should pare back winnings, keep their allocations tight, and make sure they don't load up on one particular stock or sector.
Always good advice, and you certainly know it's a bubble when it bursts, that's for sure. Leo Kelly, thank you so much, Leo, for sharing your thoughts with us today. We do appreciate it. Lauren.